So the key thing is just what's priced in, and right now the key questions are healthcare and tax reform, and we argue that both are actually excluded from market prices. So most of the chatter that we've certainly seen across the market has been on, will we see some more substantive progress administratively on either topic? And really what we're seeing looking across baskets of stocks is that neither are really factored in. So we do think that the global economy is certainly showing momentum and the markets are following. So we think that if there is some more substantive progress, that actually would be the next leg higher in a lot of risk assets. So we really retain that pro-growth stance for our clients, and that's really worked out so far this year, and data suggests that we should continue that stance.
Michael Tyler, how about you? What that you've heard so far in the headlines would cause you to do anything differently in your investing? Anything?
I think that Eric's right. We are in a global pickup in demand growth, and that's a good thing. So what would worry me would be issues that come up that would deflect that. And I think to some degree there's some optimism that we might get tax reform next year. I think there are very few people in the markets right now who think it's going to happen this year. But this year, we've got very strong corporate earnings that are going to carry the markets through for the rest of the year. I'm looking ahead to next year. I want to see some form of tax reform, and I do want to see the immigration debate resolved because 800,000 people is actually a meaningful portion of our population growth on a year-on-year basis. And frankly, economic growth and corporate earnings growth does depend on having more people here, more consumers, more producers, more students. That is one of the engines that makes the American economy grow.
I don't know. Does it matter to you whether the high end get tax cuts?
It does. It certainly is important.
Supposedly they're not now. That was kind of new.
So it was a bit of a difference from April. So April, the discussion from the White House was that the top tier would be moved lower, and certainly yesterday the suggestion was that it would either be flat or potentially increase. So that's something that we do think about the wealth effect, Joe, and if there is a knock-on effect of consumption. So it is important.
We're going to have Kevin McCarthy on today. Michael, what do you think Kevin Brady thought when he heard? I don't think their plan includes. I don't think they intentionally are trying to cut taxes for rich people, but part of the process that's going to be part of it, unless it's different than what they're proposing, unless Trump has something different in mind.
Well, we'll see about that. But let's face it, the wealthiest people, it's not going to change their consumption or their spending all that much if they get a tax cut. But if you have a middle-class tax cut that affects hundreds of millions of people, that does have a meaningful impact on their ability to spend money, to invest in their homes, to invest in their businesses. That's really where you can see a much more profound impact from a tax reform package, possibly a tax cut as well, although I don't think that's priced into the markets yet. But those are the people who could benefit most and in turn help benefit the economy the most.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.